Modern financial markets operate on a specific premise. The people within them act as rational calculators. The assumption is that investors evaluate risk, assess probabilities, and allocate capital to maximize mathematical utility. Yet, the moment a trading terminal shifts its illumination from green to red, the human body undergoes a physiological change. Heart rates fluctuate and cortisol levels rise. While the numerical valuation of the asset remains identical, the human interpreting the screen has already begun to shift their behavior. When photons hit the retina, they convert into electrical signals that race through the optic nerve. Neuroscience reveals that color impressions form in the brain in just 13 milliseconds. This happens precognitively, before the brain evaluates shapes or logical constructs. We are using biological hardware evolved for rapid environmental recognition to interpret complex derivative pricing and algorithmic trading patterns. Before an investor finishes a single calculation, the colors on the screen have already established the emotional frame through which the data is interpreted. The color conventions of a digital display are the result of the physical constraints and pigment economics of 18th century accounting. In this ledger, clerks recorded positive balances using black ink. Derived from cheap materials like soot, it became the default for positive news. When accounts fell into deficit, clerks switched to a secondary ink, typically red, derived from expensive pigments like cinnabar. This distinction allowed managers to gauge a business's health simply by scanning for red pigment, bypassing the need to read individual numbers. This birthed the idioms "in the black" for profitability and "in the red" for debt. In 1893, the Financial Times began printing on unbleached paper colored with a specific china clay. This bisque pink hue was a cost-saving measure that eventually evolved into a brand identifier associated with financial authority. When finance migrated to early electronic tickers, the screens adopted green phosphor text to signal growth, a choice reflecting Western traffic signals. The modern trading screen is a patchwork of these historical pigments and civic signals, now integrated into the structure of global finance. The biological journey of this data begins when a red photon hits the cone opponent signals in the human retina. The raw visual signal travels via the optic nerve, crossing the optic chiasm, and moving through the thalamus, which serves as the brain's sensory gateway. The brain synthesizes color when the signal reaches the V4 complex, responsible for color constancy, ensuring a red number looks red regardless of lighting. From V4, the signal propagates forward, sharing hyperconnectivity with emotional and memory centers in the temporal lobe. Perceiving the color red activates the amygdala. This triggers an evolutionary avoidance response associated with threat detection, occurring before conscious mathematical thought begins. In laboratory experiments, presenting financial data in red reduced risk-taking behavior by 15 to 30% compared to the exact same data shown in black. Conversely, the perception of green activates reward pathways like the ventral striatum, fostering feelings of psychological safety and a willingness to risk capital. This entire process occurs within 90 milliseconds. It indicates that investors often feel the state of the market before they have finished calculating it. The association between red and danger is not a biological absolute. It is a learned convention that inverts in Eastern markets. In China and Japan, red denotes prosperity and good fortune. On the Shanghai Stock Exchange, red signifies an upward move in price, turning a signal of Western panic into a cue for buying. Western retail platforms utilize these visual cues to manage user attention. By utilizing bright, flashing colors and animations, like bursts of virtual confetti to celebrate a trade, these interfaces create sensory feedback loops. While green provides a psychological reward, stark red alerts can induce anxiety that overrides a long-term investment strategy. In these environments, the interface itself directs attention. By leveraging visual saliency and color, digital dashboards steer order flow toward emotional impulse rather than deliberate logic. This reliance on a binary color system creates a barrier for the estimated 300 million people worldwide living with color vision deficiency. For these investors, the traditional red-green contrast is illegible. As a result, the industry is moving toward web content accessibility guidelines. These standards mandate specific contrast ratios to ensure that macroeconomic data is accessible to all users. This transition involves adopting the Okabe-Ito palette. It replaces clashing reds and greens with scientifically engineered shades of vermilion, bluish-green, and sky blue that remain distinct across all major types of colorblindness. Shifting toward these standards accounts for the diverse physiological realities of a global user base, reducing the risk of cognitive overload. The human brain trusts color because throughout our evolution, it was a reliable indicator of the state of the natural world. It signaled the safety of food and the change of seasons. Today, the mind attempts to apply those same survival heuristics to the abstract numbers of a global economy. A colored pixel possesses no economic mass. It cannot execute a trade or alter a corporate balance sheet. A digital chart reflects the mathematics of the economy, but its interpretation begins with the biological limits of human perception.